Okay, today we're going to look at a problem from chapter 3, dealing with working capital and free cash flows. So this is the organization we're looking at here. This is a set of financial statements. We've got financial statements from it's Arlington Corporation. We've got financial statements from 2017 and 2018. So we've got their balance sheet here, asset section, liability section, and equity section. And then we have their income statement here, sales. We got their earnings before income tax, depreciation, and amortization, earnings before interest and taxes, and then earnings before taxes, broken down on the income statement itself. So the first question asks, what was the net operating working capital for 2017 to 2018? Assume that all cash is excess cash, i.e. this cash is not needed for immediate operating purposes. So our net operating working capital is our operating current assets minus our operating current liabilities. Now to define those two, we've got our operating current assets is going to be my current assets minus excess cash, and my operating current liabilities is going to be my current liabilities minus my notes payable. So I can simply start a formula here. I'm just going to have the type numbers in because this is unfortunately a picture over here, not the actual numbers on my spreadsheet. So first thing I need to find is my current assets. My current assets is right here. I've got my total current assets of 83. Well, actually, let's do 2017s first. Let me label these 2017, and we'll do 2018. So my total current assets for 2017 is 71,000. 71,000. And I need to subtract any excess cash, which they said that all the cash is excess cash in this case, so all 14,000 here. So 71,000 minus 14,000. This will be my my operating current assets. There's my operating current assets, 57,000. Now I need to find my operating current liabilities. Which is my current liabilities minus notes payable. So for 2017, that is current liabilities is 20,050, and my notes payable is 5,050. So 20,050 minus 5,050. 15,000 for my operating current liabilities. And now to find my net operating working capital, I just subtract one from the other. So net operating working capital. So equals 57,000 minus 15,000. 42,000 is my 2017 net operating working capital. I can do the same thing for 2018. So I've got my current assets is 83,320 minus my excess cash, which in this case is 15,000. And that gives me 68,320 for my current operating assets. My operating current liabilities, I've got as, let's bring it over here for a second, 25,100, and my notes payable 7,000. So 25,100, so 18,100, and then I subtract one from the other, like I did before, to get my working capital is now 50,220 for 2018. So it's gone up. That's a good thing. So that's part A. Part B says, what is Arlington's free cash flow? So free cash flow is earnings before interest and taxes, EBIT, times 1 minus the tax rate plus the depreciation and amortization amount to get back to basically EBITDA, earnings before interest, taxes, depreciation, amortization, minus my capital expenditures. plus my change in net working capital. So for this one, first thing I can find my EBIT, which is 44,000. So equals 44,000. Parentheses here since I got some multiplying to do. Times 1 minus T stands for the tax rate. So it should be 40%. Taxes are 40%, so 24. Okay, plus my depreciation and amortization, which is 6,000. Close up parentheses, and all of that minus my capital expenditures. My capital expenditures, which is, what do I have for capital expenditures here? Should be, you take the capital expenditures, we should be able to find by taking the depreciation added to the change in fixed assets. So my change in fixed assets went from 6,000 to 48,000. So that's 2,000, and I add that to my depreciation, which can be found either with depreciation expense or my change in accumulated depreciation, which in this case is 6,000. So my total capital expenditure should be 8,000. That's 6,000 plus 2,000. Plus my change in net operating working capital. So that's these two numbers we just found. So I'm going to take the 2018 minus 42,000 to get 8,220 should be. I think I have enough parentheses. Oh, I got rid of all my work. Okay, let's just do it again. So equals 44,000 times 1 minus 0.4. Let's just do this piecemeal. So there's my 26.4, and I need to add all of that plus 6,000 to add back in my depreciation and amortization. So now I'm at 32.4. And then I need to take all that minus my capital expenditures, which we found as 8,000, plus ventures plus my change in net operating working capital. So 16,180 is what I should get from my free cash flow. Okay, so that's part B, that's free cash flow. Okay, C says to build a statement of stockholders' equity. So statement of stockholders' equity is always how we build that is we start with the prior year's beginning balances, and then we show the changes that have occurred over the year. So we got balances as of 12/31/17, And we're going to need to have everything in the equity section. So we're going to have common stock, we're going to have retained earnings, and we'll show dividends on here too. So common stock, and we'll label that both in shares and the amount. Show shares of common stock and the amount of common stock. And we also want to figure out our retained earnings and eventually come to a total stockholders equity. So balance on 12/31 for this company for the shares was 4,000 shares, and they must have been $10 a share because the balance is 40,000. So 4,000 shares. Yeah, and then my retained earnings, I've got a balance of, what's my retained earnings at the beginning of the year? 36,950. Which means my total stockholders equity, I can just add those two together to get what my total stockholders equity is. Okay, so my total stockholders equity is 76,950. Then I need to add and subtract things that affect my retained earnings. So things that affect retained earnings, net income or net loss. Okay, net income increases my retained earnings. A net loss decreases my retained earnings. Dividends is money paid out from my retained earnings. That would reduce my overall equity in the company. So now we can find that. So what was my net income? 2018, I believe this company did have a net income, and it was net income was 23,190. So that would go into my retained earnings. And then we also paid some dividends, cash dividends specifically, and that was dividends paid down here at the bottom. I got it here, 13,920. This is reduces our retained earnings. So 13,920. And then we can come down to whether we add, so I'll call this an increase or decrease in retained earnings. So we're going to take a beginning retained earnings plus my net income minus my dividends to get, actually, sorry, I want to find the difference first. This is my increase or decrease. I'm going to find the difference in net income plus my cash dividends, which is 9,270. I'm going to add that to my 76,950, my beginning balance, to get my ending balance and retained earnings. And I can bring these down too, because these would be the same. I didn't issue more stock according to what I'm seeing. Okay, so that's a statement of stockholders' equity for Arlington. All right, next, part D wants to know about economic value added. So economic value added, the formula for economic value added is earnings before interest and tax times 1 minus the tax rate minus the total invested capital times the after-tax cost of capital. First thing we got to do is find the earnings before interest and taxes. We already did that. So let's go ahead and do that. This part here, the EBIT and then 1 minus T. So I'm just going to do that part of the function right now, EBIT and 1 minus T. So EBIT is 44,000. And I'm going to multiply that by 1 minus the tax rate, which is 0.4. Give me 26.4. So that's my EBIT times 1 minus T. The total invested capital I can find by taking my notes total invested capital, where I got it here, formula for it, notes payable plus long-term debt plus common equity. So my notes payable is 7,000 right here. My long-term bonds, which is long-term debt, is 20,000. And then my common equity is that number I just found in the prior problem, that 86,220. So notes payable, 7,000 plus my long-term debt, which is these bonds for 20,000 plus 20,000 plus this number I just found, my equity from the prior problem. Give me 113,220. So now I got to find my after-tax cost of capital percentage. And that is given in the problem. After-tax cost of capital percentage is 10%. So now I just have to basically fill out. So this is the formula. Take this number minus this number times 0.10. 26.4 times 1, I'm sorry, 26.4 minus 113,220 times 10%. Should get me 15,078, and that should be my EVA, economic value added. Okay, last one on this problem, my market value added. So my market value added is the price times the number of shares outstanding minus the book value of the common equity to figure out how much market value I've increased in this case. So it says that the stock price was $25. So if we assume that's a stock price, then I can take that as my stock price here for my formula. So equals 25, equals 25 times my number of outstanding shares was still 4,000. That didn't change. Okay, so there's my price times the number of outstanding shares minus the book value of the common shares. And I can go back up and find that as this 86,220 that I already calculated before. So my market value added is 13,780. And that'll be it for this video.